Well, howdy, folks. How are you? So, we're going to be looking at a run to the buy side, and I'm using this portion of price action as an inversion fair value gap. So, just give me a second here. That's good enough for government work. And put stop loss right below this candlestick's low. Okay. And this is the SIBI that I'm using as an inversion fair value gap. So, while it was trying to trade down into it, market it in. And also notice let me see if I can get this to run up a little bit. Sometimes when I show these videos on X, they're not as crisp and you can't really see what I just do. I'll grab the stop loss. The wicks don't appear so easily in the playbacks on X. So hopefully it'll be more clear now. But if you see this candlestick's wick here, okay, we've been trade down into it. The body's never inside the range at all. This one has yet to trade down into the wick yet, but if it does, what I'm watching for, I don't want to see a close or a body laid down below this level here. Okay, that's what I'm watching for. If we take out this high, then I'll roll the stop loss up to just below this candlestick's low to minimize the open risk that's in the position right now. So they used the wick here, there, and now we want to see it accelerate and have long stretched out up close candles start to ensue on a run to this high here. So that's the next order of business. So this short-term high has been taken. So now I can roll the stop loss up just below this low. So now I'm risking less than it would cost for you to order a pizza for home delivery. And potential profit that we're going to aim for is getting back up to today's intraday high. Now, if you look at this, well, we'll look at through the regular trading hours. Regular trading hours gap is settlement from Friday and opening today at 9:30. So those are the two time factors for delineating regular trading hours open and close. Regular trading hours close on Friday. Regular trading hours open on today, Monday. And then consequent encroachments here. So while I'm not expecting it to go there, I wouldn't need it to do that. I would like to see it come back up and knock out everyone that's short already looking for lower prices. By having them run this high out, that would be a lovely little objective to reach for. So we'll just do that right there. Okay. And then now we can drop back down into electronic trading hours and let this thing cook for a little bit. Broadening out just so you guys can see the wicks and the relationships to previous candles ranges. Okay, so we want to see this high taken out aggressively and then rip through this one as well. Always real live price action, never market replay. Okay, so I want to see it continue its run higher, removing the risk. So now using discount brokerage commission costs, that is the equivalent of covering that. It is a demo trade. Like I was telling you yesterday, we're doing an exercise to see if you can work towards trading over the course of 4 weeks to harvest with the one micro contract. You already see me use the micro NASDAQ with the screenshots. I tried to get the OBS to work and it wouldn't let me do it. So between trying to get that to run and start, I was just taking screenshots of what I was utilizing with the micro NASDAQ. So it was $176 in a demo, just like I gave you as an assignment yesterday evening in the Trader Roundup podcast on X. You can go back and listen to that. Kit, I'm sure, has it available still. All right, so we want to see it really start to tear off here to the upside and punish those individuals that are looking for continuation to the downside. And then you would have seen two examples, both directions being utilized, and two different markets, the NASDAQ, which is the one I tend to trade to the most, and then the micro S&P, which is what I get a lot of questions for people that trade this one. They don't like the NASDAQ for whatever reason. Um, here you're seeing this stuff works here as well. Hmm. Hopefully it runs up there and allows me to have this video be rather short because X usually doesn't allow me to do a lot of lengthy videos without giving me a hiccup or an issue with the upload. I've had executions where I recorded them with commentary like I'm doing here, only to find out that it never really made it. It puts it in the drafts portion of the posts, which is a little disenchanting because it's like I'm assuming that it's up there, and later on in the day I'll come back and see what people's responses are and replies to it, and it's like they're not replying to it. I'm thinking to myself, clearly somebody saw that and learned something from it, and it's not actually made its way to the X platform. And then I look at the upper left hand corner of my phone, and it'll say, failed to send. I'm like, oh, come on. So it's not easy being an influencer because I guess technology, while it's great and all, sometimes it creates little barriers, and it annoys me personally. I would like to see things work more streamlined, and trying to get like an OBS to hook up, and like I don't know any other live streaming platforms other than OBS. Like I'm not an avid live streamer. If you have some suggestions, I'll take it under advisement. And maybe it's just me simply just not doing something right in the settings that's causing the issues. It's not all the time, but it's enough to get under my skin and make me not real happy about trying to use it. So when we're trading with the micro S&P, it is $5 per handle. So $5 per handle, and let's assume we have a target for $1,000 for 4 weeks. Okay, so 4 weeks of trading, only one micro contract. If you're going to be a short-term scalper, and I'm kind of like trying to inspire you to do that with this assignment, use your demo account with one micro contract and try to get at least nail down like a $50 win per day. If you do that over 20 trading days, there it is. Here's your $1,000 net for the 4 week period. But try to stretch your wings a little bit beyond that. So if you're brand new, to trying to use the concepts, and if you've wrestled yourself into scared money, maybe you've blown some accounts, maybe you've blown or failed these funded account challenges, and you're just afraid to do anything. Your mind's a little cluttered up. My suggestion is just try to go with very small base hits. So that would be like 10 handles on the micro S&P. Like for instance, right now, I have over 10 handles right now. I could close the trade and it would be over $60, and then I'm good for today. But because I'm trying to use a little bit of experience that's on my side, I'm going to reach for the things like I teach. So we probably made this morning session low here, and while they have taken this buy side there, I believe that this high is still reasonable, and it could still go lower if it's going to be a lower close day. That doesn't change that. It just simply means it's knocking out those people that are short rate from the open at 9:30. So there's 9:30's candle. So we're going to see. Um, Again, I don't use market replay. It's not necessary. Now, what I'd like to see is I would like to see it start running higher off of this down close candle here. I would like to see that support price. I don't want to see it go below it and go like running for this liquidity there. I don't want to see that. I want to see it try to go higher. And what that'll do is it'll afford me the opportunity to roll the stop up just above this high. And then I've locked in a good portion of what I would expect to make for this week for the goal of trying to make $1,000 just using one micro contract over the span of 4 weeks. Because the premise is this: instead of trying to get rich real fast or over leveraging to get these really big payouts, if you get lucky in doing it, heavy-handed betting and gambling, sure. When momentum is in your favor and you've got lucky with your entries and you're holding on to heavy-handed bets, you can see a lot of profit build up in your account. But the problem is double-edged swords. So if you use this double-edged sword and you think it's only going to work for you on the cutting side, that you forget the other side will take your head off. And the the adverse effects of using heavy leverage will see many times what you see grow in profits with heavy-handed betting. The time it took to get there, it's half the time or even less for it to go away and draw down to erode it. So once it clears this little candlestick's high here, I'll just borrow this line. Once it clears that, then I'll roll the stop up to just above it. For right now, just put it right there. So I've already banked, hypothetically, if I get stopped out, I got the $50 for today. Now, for some of you, you're probably thinking $50, man, come on, dude. Well, if you're constantly losing, you're not profitable. $50 is doing better than that, right? You got to get back to why you're doing this. If you're not trying to make money, then what are you wasting your time for? It's about making money. So right away, you can see how this inversion fair value gap just was beautifully handled with price coming down into consequent encroachment, upper quadrant, and then we used the open of that candlestick there, and then it really ripped and roared above these two liquidity pools I mentioned. Um, there we go. That's what I'm looking for. All right, so this is rolling up to get the $100 if I'm stopped out. So I'm in a good position now. I'll get $100 after commission, hypothetically. Again, this is a paper trading example, as I gave you as an assignment. And for the folks that are just now starting to watch me, um, I'm in the United States, and there's an entity called the Commodity Futures Trading Commission, CFTC. I am not a regulated trade advisor. I'm not a CFT. I'm not a financial advisor. I'm not licensed to give you trade advice or financial advice. So while I have a great deal of love for teaching the markets and price action, I have to operate under the protection and umbrella of it's paper trading. I'm not promising that you make money, and I'm not liable for you if you lose money because I'm not telling you to go into the market and trade with real money. So it's me protecting myself from things that the government would love to do to someone with my size of influence. And if that bothers you, go somewhere else. I'm sure there's somebody else out there giving you hindsight stuff, right? Or they're charging you money. I'm not charging you anything. So no one's holding you here. You're not held hostage here. All right, so we got real close to that high. It should just pop right on through it and give me another little peacock moment. Looks like the guru that knows what he's doing. Come on, pop up in here. A little bit of dog whistle action. Come on, send it up there. There you go. Well, there's the run. And there's guys out there that will say, it's foolish to try to be so precise about where your entries are and try to get these perfect, entries and stuff. That's coming from someone that's a gambler and they're just heavy-handed betting. And that heavy-handed betting eventually wipes you out because I would rather be highly precise with small bet sizes and be very surgical. I mean, look at that, folks. Look at that right there and right there. Okay. So what is this down close candle? To pull a shorter block. That's what's being utilized there. I'm using inversion fair value gap in concert with this idea. And this just makes it very, very easy to participate with the price action when it's given to you like this. Let me clean that up a little bit. Okay. So my entry is right there on that opening price. Ta-da! It's not market replay. See that? See that right there? That market replay. Fountain Cycle. Enjoy your day.